Ben Zhou is the CEO and co-founder of Bybit, and he's somebody that I've personally actually looked up to for years. He's launched one of the biggest crypto exchanges in the industry, and I started using Bybit as just a normal trader since before I even started to work with them, just as my exchange of choice. I've had a great experience with Bybit, never had an issue, and I've been using it as my primary exchange pretty much ever since. I've been looking up to this guy for a long time, had a chance to meet him earlier this year. He's a great businessman, knows a lot about the game, built a huge company, and today I've had a chance to speak to him. So here's the thing. I work with these guys. Integrity is very, very important to me. And what I said to them is, look, I'm going to be asking Ben a couple really difficult questions. I'm going to just point blank throw things at him that might not be super comfortable. Number one, can I do that? Number two, can I do this without telling you what my questions are up front? And number three, is there anything off limits? Yes, I can do that. Nothing is off limits, and everything was fine. I didn't even have to send the questions up front. That was a really, really big green flag for me. I think he did really well with it. I'm not trying to trip him up in this. I wasn't trying to pull a Piers Morgan or anything like that. But I was asking the very important questions that I want to know as a trader, and by extension that you would want to know as well. And the thing is this guy, he's very knowledgeable in the space, right? I'm not going to sit here and waste his time asking stupid questions like, where do you think Bitcoin is going to be in 6 months and stuff like that, because nobody knows. But that is coming, and I have asked him anyway, so stay tuned for that if you are interested. And the other things that we're diving into are very deep, very, very big, important topics that I think most people wouldn't even think to ask him about. And that means a lot of this stuff might just fly straight over your head. Don't worry though, I've got you covered. What I'm going to do is anytime we're talking about something that's a little bit more complex, that you might need a bit of additional context to understand, you're going to see definitions around the bottom of the screen, where I'm going to be explaining to you exactly what we're talking about, so you have the full context on what we're discussing. This is a really, really big one. I'm very, very excited for you to watch it. I think you're all going to enjoy it very, very much. And if you're as excited for this as I am, do me a favor and smash up those likes. Just double check that you are subscribed and you've got the bell icon checked as well, because the content on this channel is all very time sensitive, brutally realistic, grounded analysis on the financial market, specifically Bitcoin and crypto. I'm a trader myself, so I'm only bringing you guys the truth that I'm following, because shit, I need to be truthful to be trading well in this market as well. If all of that sounds good to you, this is the place to be. And if you decide that you want to sign up to Bybit, they're offering you a $30,000 deposit bonus right now. Absolutely huge, depending on how much you deposit and trade with when you sign up to Bybit. So if you want to be able to take advantage of that, check out the link in the description down below. You can do that now and then come right back to the interview. This is a really, really good one, and that bonus is free cash that you can trade with, right? So it's risk-free trading. You can throw that money into a trade. If you make money, it's yours. If you don't make money, it doesn't matter. It wasn't your money to begin with. All right. I'm looking forward to this one. I'll see you guys on the other side. All right, Ben, how you doing, man? Where are you at?
Very good, man. I'm in Singapore.
Nice, nice. I'm in Dubai right now. It's chucking it down right as we've started to record. But I don't want to waste any time. This is a crazy time in the industry right now. We've seen a huge collapse. Indices have been rallying. The dollar is dropping. Bitcoin and the crypto market should be shining. But something kind of big has happened recently. You may or may not be aware of it. I want to get your scoop on all of this stuff. But the first thing that I think is most important to talk about is Bybit and its safety. There's a lot of people that everyone should be keeping their money on hardware wallets and stuff like that. We already know this, but a lot of people do still keep their money on exchanges, and we're worried about the one-to-one proof of reserves and all that. I know you've already covered a little bit of that. Can you tell me a little bit about what Bybit is doing, a little bit about the Merkle tree that you're going to be introducing, and also just explain this like I'm 5 years old?
Yeah. So, of course, everyone knows what happened with the whole incident, and obviously for the past, I think, 10 days, we've witnessed a lot of clients withdrawing, a lot of institutions withdrawing. As exchange, the first priority is to make sure everyone can withdraw as fast as possible. So during the past 2 weeks, we're pretty much all hands on deck, making sure that withdrawals are processed even faster than before. Can you hear me?
Yes, yes.
Okay, good. Yeah. So number one priority, fastest withdrawal, and I think we've done a tremendous job, and kudos to the team and the support on that as well. Second step is a lot of exchange, or some exchange have published some wallet information. Bybit is one of them as well. A lot of clients are wondering are we keeping clients' funds separately? And the first step is to obviously demonstrate users' funds are kept in cold wallet storage, hot and also warm wallet storage. We've done that, and from our community, we've received very positive feedback. It's a very clean structure, and we've always keep our users' funds separate. On the middle term, everyone is talking about proof of reserve. So let me just explain to you what it means, right? It's basically involving a third party, typically an auditor. The best case scenario, a very reputable one, PwC, Ernst & Young, one of those guys, that would audit you. Because for now, for the exchanges like us who publish all the wallet information, it doesn't prove anything because the money could be borrowed. And it doesn't show whether the company treasury is involved or mixed with it. And also it doesn't show the liability of the exchange. So the point of the Merkle tree is a fancy word just to say that you take a snapshot of all your users' accounts along with their balances. And each user ID, for example, Sammy, you have a user ID on Bybit with, 10,000 Bitcoin. You are like one leaf on the tree, right? So you have the whole tree, and you take a snapshot, and you package them into the Merkle tree, and so it's encrypted. And you give that information to the auditor, and the auditor will they have the key to open the tree and to check all the total aggregated number, and as exchange, and then you will prove, your wallet as well as your treasury, your operation wallet, your OPEX, your liabilities, all of that. Once they audit all of that, and they can make sure that actually whatever the total amount of the Merkle tree matches your segregated client's account in your cold wallet, hot wallet, and warm wallet. And then the auditor will be able to offer that information to the public. So as a user, what you can do is, once that's been done, you can go onto your account and kind of get your key to open your part of the leaf on the tree. And then you can use your key, the hash code, whatever, to go to the auditor's website to check your balance at the time of the snapshot, which is how many Bitcoin and Ethereum, whatever. And then you can make sure you're actually part of the audit. So that's kind of the whole process, right? And that's the middle solution. The reason I'm saying that is because it has proven some difficulty with that. Ever since the incidents of FTX, I can be very frank, we've contacted all the global major auditors, PwC, Ernst & Young, all these guys. Nobody wants to take on crypto entities or crypto companies, and they don't want to get involved. They don't want to vouch for any crypto companies because they feel like it's messy and dangerous waters to deal with. There's one auditor that Kraken used, I think it's called Armino. They also stopped onboarding because they got super scared when all these exchanges approached them, and apparently they're also the auditor for FTX. So There we go. Not really a good auditor and for people to trust. So we're kind of stuck because we need someone who's reliable and people will trust. And if you find someone who just established and very small, then you lose the whole point of the thing, right?
So it needs to be done by a company that's kind of stood the test of time, that people like, if it's, you're saying if it's a new auditing firm that doesn't really have a reputation for being solid, it almost doesn't mean anything. It could be your friend that runs a company, but it's more meaningful if it's got you. Okay. What I'm curious about is Bybit's been running for quite a while. So have other ones like Binance and so on. Why has no one done that yet? Like, why has no one done like a really big out there, like, look at my proof of reserves, look at my Merkle tree? It's November 2022. Why is it happening now? Of course, I know there's a need for it with the FTX crisis, but couldn't it have been done before?
It could have been done before. And I think moving forward, the industry standards have just been lifted. I understand that regulator will be coming in with heat and, of course, cracking down crypto a lot more than before. But I think even from a self-discipline and self-regulatory perspective, exchanges now are expected to do the proof of reserve. So I think, how industry just evolving extremely fast. And, in a bull market, the last one we witnessed, most people's focus wasn't on the segregation of fund and all of that. It was on DeFi, it was on NFT, it was on GameFi, and exchanges like us, we were so busy on building out products that clients are asking every single day, such as token listings, liquidities, and also fiat gateways and all these things. So it kind of got pushed out of the way. But I guess, of course, now you are expected to do that, and exchanges that don't do that will be obsolete. So I think this will be the industry standard moving forward. Yeah.
You think it's an interesting way to drop off competition? The ones that can't do this are going to be exposed pretty.
In a way, it is. And also, you've seen some exchanges that haven't done that or not moving into this direction. And of course, the market will choose and client will ask questions. It will be difficult to compete if you don't do that and make that distinction. Yeah.
It's the beautiful thing about, like, governments could have stepped in and messed this all up for us, but in this case, it's the crypto community that's demanding it of exchanges now. This is the market talking. People are voting with their money, and I've always thought that that's a better way to regulate than governments coming in, because they don't really understand what's going on better than users would.
Right. So I don't think regulation is the answer to prevent this, because things like that, whether it's Lehman Brothers or any of these, a lot of bad actor also occurs in a very regulated environment. So it's not a regulation versus non-regulation kind of a debate. I think it's, actually competition and kind of a free market will solve the problem, and that's what we were kind of witnessing. I haven't finished my comment on the proof of reserve. So because this solution, I think, doesn't solve the problem. And I still believe that we need to use blockchain to solve a blockchain problem. So by the end of the day, I think we're actually talking to some major players in the industry to see if we could somehow be able to allow clients to really see their assets on-chain. In a way, we can use a multi-sig with MPC solution, where user holds one key, exchange holds one key, and we can use a kind of a new layer 1 or layer 2 or a colossum of layer 1 to do the verification, so that even if exchanges want to do bad stuff, they are not able to do so. Yeah.
This one I've got on screen, is this what you're talking about right now, this Nansen portfolio?
No, this is only showing you the wallet information, right? So this is only step one, what we have done. So we're actually talking to some industry players to see if we could have maybe 10 players, let's say, some exchanges, some other reputable institutions in the industry, such as Nansen or crypto industry players. We can form a very fast, free transaction private chain, which is also open for public to view. And then you'll be able to kind of broadcast your trading transaction onto the chain, and so that all the things are recorded in real time. The problem is now if we use Ethereum or any chain, no exchange can afford that. Because imagine you're trading derivatives, you're trading like milliseconds and scalping with all these orders. Your P&L needs to be consolidated and broadcasted. Otherwise, if you withdraw, your peer who you win the profit from cannot be consolidated. So you need extremely fast blockchain to fix this problem. So and that's what we kind of digging into right now. Yeah.
Is this moving in the more decentralized exchange direction that you're describing?
Not really. Only for wallet solution. Only for custody. Yeah.
Got you.
Because at the end of the day, DEX can solve some problems, but DEX cannot solve the high frequency problem. Even now, we are connected to like Tower, Hudson River, Jump, and all these big guys. Even now, they are complaining about 5 milliseconds, 10 milliseconds of delay. And they are actually choosing different venue to trade because the tiny little delay you make on your infrastructure. So that's why they're not trading on DEX. And I don't see they trade on DEX anytime soon. It's very hard. Yeah.
We're going to get to that a little bit later. There's actually something very interesting that I wanted to talk to you about with regards to this, where if you've got on-chain trading that happens with a DEX, for example, there's one very interesting way that people that are really smart are trying to game this is if I'm putting in a transaction to, let's say, buy $10,000 worth of Ethereum, but I've got to pay a gas fee for it. There can be a bot that front runs my gas fee and does the same thing before me. And they just they get in before. Do you think that's a vulnerability of that kind of trading?
Yeah, actually, I've heard that on Sushi and also on Uniswap happens.
Yeah.
And this is why you actually have to set your slippage to a certain level and also your fee. Otherwise, if you have a very big sum of transaction and you don't set your slippage, people can actually front run you not by doing that using the bot. They can actually pay the block producers to package their order first when they see your order being broadcasted. So I think that is happening in the industry even now. But I think there's also a way to solve it eventually. Yeah.
Do you have any ideas what they might be? I'm just super curious.
So for us, I mean, even myself, I set my fee to a very, so I don't allow slippage. I think that can only happen when you don't limit the slippage. And they actually take advantage on your the slippage, and they give you a very big slippage with their bots by front running you, right? So I said it, and it's always a good practice to set your slippage tolerance to a very, very thin margin. So you either get executed or rejected, and you just got to try it again. Yeah.
Okay, that's pretty good. It's fairly straightforward insurance against that. Before we close off the liquidity issues, there's one question I've got to ask you point blank. We've seen this with some other characters, I've forgotten the names now, where money has been thrown around from exchange to exchange right before they proved their reserves. And you mentioned this a little bit back. Point blank, have you ever taken liquidity support from anyone else?
Well,
in order to demonstrate reserves specifically.
To be very frank, we only started doing reserves since last week, right?
Okay.
And if you look at all of our wallet, it's very clean. There's no sudden big internal incoming transfer and exiting outflows, right? So, I mean, because blockchain is very easy to analyze your flow. So we don't have that. But, you know, there are some rumors about other exchanges who do that. I mean, I don't know what they are trying to do, whether it's a mistake or you know. Yeah.
Yeah, we don't need to talk about that. I think everyone knows exactly what's going on.
Yeah.
Yeah. These are important things, because the cool thing about what we've got with the blockchain is you can't lie. I mean, you know, like the second you try and put it, the second you try and mislead people, on-chain analysts will just come in and really fuck up your day. So
yeah,
and that happens so quick.
There are a lot of people on Twitter. You can see this whole FTX thing is like public self-journalism, right? People are just digging out information, and this is why Twitter is been crazy. You can just read Twitter and not sleep.
Yeah. Well, a lot of people were like that, and it was very interesting to be able to see it all unfolding. I do want to talk about FTX a little bit later on as well, but I'm curious to know, you know, we're coming up to the end of November 2022. We're in a cycle of rate hiking with the Fed. Bitcoin's never lived through something like this, and that's before we even talk about any altcoins. What are you seeing, man? I mean, I know it's always hard to answer these kind of questions, but kind of 6 months down the line, but even a couple of years down the line, in relation to the rate hiking or just Bitcoin standing up on its own as a hedge against inflation, what do you see for Bitcoin price wise? And if you can even give me a number, I'd love to hear it.
I think we most likely will see a 4-digit Bitcoin.
Okay, you think we're going below 10?
I think we're going below 10. Simply because I think the ripple effect has only started with FTX. I mean, FTX is essentially a ripple effect of Luna. And I think Alameda lost tons of money. And I think that's after a few months now, FTX is going down. And with FTX, you see Blockfolio and now Genesis Trading, which is a huge borrowing lending firm. If they go down, I mean, they are shortfall of 1 billion for now, and you don't know whose money is in it, and there might be more counterparty at risk. So,
does Bybit have any vulnerabilities like that?
We simply don't, well, for FTX, we don't have a trading arm with FTX, so we don't have any money deposited within FTX. But of course, our employees, some of them are affected, and we see a lot of our partners lost money, and even people around me lost a lot of money with FTX. Yeah.
Yeah, dude, it really sucks. What I'm curious about, so there's two things here. The first one, what do you think about? I mean, like if we keep dropping down, we've got Michael Saylor, for example, like a lot of big margin calls potentially gonna be a problem, but also just exchanges going bust, which, mate, to me makes no sense, right? Because if you're not kind of loaning out money that's already been deposited onto your platform and so on, like there's no reason that you should go bust as the price drops lower. It might be harder to pay for your fixed costs and so on, but I think if we get a sub 10K Bitcoin, a lot of people that should have been prepared won't be. What has Bybit done for that, and what do you think that ripple effect could look like? Do you think we're going to see more exchanges dropping off because they just can't pay for stuff?
Exchanges, I'm not too sure, because typically it's a very good cash flow business, right? I mean, you might see some exchange that's more focused on spot. If they don't manage their own treasury in a positive way, and they are holding onto a lot of Bitcoin, Ethereum, when the price drop, maybe they can even cover their operation costs, right? So that might be a risk. For Bybit, we're extremely healthy because we started off being a derivatives, and we actually started off in the winter, in the last bear run, which is 2018. And actually, when it comes to bear run, it's our kind of home turf. And as long as there's volatility, people will still trade on Bybit. And of course, we've always been very prudent with the way we manage the firm and we manage our treasuries. So we hold all of our fees we collect, we majority hold them in the stable coin, so that we have at least 2 to 3 years runway to cover our OPEX, even if we make zero income. So I think we're pretty prepared. Yeah.
Which stable coins do you use?
A mix. I don't trust any of them. So USDT, USDC, and DAI, yeah.
Yeah. Cool. That's an important one. Because, and by the way, I don't know if you remember, I told you I joined Bybit as a customer, like just as a normal like trader. I can't remember, it was either in 18 or 19, but I joined like on my own whim, and I loved it. And it was during the bear market. I moved from BitMEX to I think Bybit was the next one I used when BitMEX started to have like a lot of the server overload issues. We spoke about that in Dubai. You mentioned USDT. So, man, I'm getting chills before I even ask you this question. The second run up from 30K up to 69K happened with quite limited liquidity. And as an analyst, I was talking about this on the YouTube channel a lot because everyone was losing their minds over the rally. And I was saying, guys, Bitcoin like isn't being bought up necessarily as much as you think it is. It's just that nobody's selling. And that's what I thought while it was happening, which was partially correct. But the other thing that we're seeing now is that it might have been an engineered run of just stable coins being printed and driving the market up. Do you know anything about that?
I mean, this whole USDT thing, I mean, I used to also think they might have a lot of problem, but they actually withstood a lot of, FUD over the years. And I think there are always some agencies probing them. I just remember every other month there's some FBI, SEC probing them, and so far I think they're okay. So I for sure I hope they're okay. And man, if that would be the worst. If USDT, anything happens to USDT, we are really going down.
Yeah.
If that happens, yeah.
Well, that's exactly what I was saying, mate, because they've had so many investigations and so on. Well, I remember like the USDT FUD, China FUD. There's always like a basket of like Russia banning crypto, India tried, but no one cares when they ban crypto, and a couple other things like that. And there's always like these set things that the media just tries to push, and it happens right when the market's at a top, right? Like this FTX thing happened right as we hit a new lower high in our market. Like it was perfect timing. And what I've always been saying about this is, like how many times are you going to see the same project, I guess, for lack of a better word, get punched and they're still standing? And at which point do you just say, look, maybe they're a little bit more legit than people are making them out to be?
My biggest concern for the next bomb is Genesis. I think most likely Genesis might announce bankruptcy. And then maybe that will link to DCG, which is Grayscale. If they have to actually release this these Bitcoins they hold, and because they actually guarantees US dollar to their investors. So they have to sell their reserves Bitcoin if there's a problem with DCG of Grayscale and pay in USD. Well, that would be a nightmare as well. Yeah.
Yeah, that's hundreds of thousands of Bitcoins that could be flooded onto the market. They would be OTC though. Do you think that makes a difference?
Yeah, I'm sure they will probably do it in a slow fashion, but we don't know how these things will unfold. I mean, we've seen FTX going down. That's kind of everyone's like, what the hell? I mean, everyone actually choose FTX because they trusted FTX, because FTX is one of the exchanges that really kind of dance with the regulators. They'd be like, well, they must be super secure, right? And then, you see them collapsing like that. It's just insane. Yeah.
Did you ever meet SBF?
I've never met him in face-to-face. I've talked to him in a few different occasions. Yeah.
Yeah. Okay. Did you have any particular impression of him? Like Elon Musk said that he thought he was full of shit, but I think most people didn't really pick that up.
Well, he didn't approach me for an investment, or we didn't raise. So the conversation was never about that. It was more of I think collaboration of different projects and things like that. So Sam was Sam, and the whole vibe, or at least the persona he presents to the world, was kind of this genius guy that's a little bit introvert, a little bit awkward, funny hair. No, so it was the same vibe. Yeah.
Yeah, I would have thought so. I mean, doesn't really rate. I certainly didn't see it coming either, to be honest. Dude, I'm curious about. Everyone knows you as the Bybit guy, but what were you doing before Bybit? Tell me about. I mean, as far back as you're willing to go from childhood or just when you started to work. Like, who are you? Who's Ben Zhou?
Well, yeah, I was born in China, and I was when I was about 12, I moved to New Zealand. So I went to New Zealand for like high school for 6-7 years. That's kind of where I learned English and all that. And then I went to the US for college. And I actually went to a very small liberal arts college. It was a Quaker college, focused on nonprofit and all that. And then afterwards, I worked in New York for 1 year, but that was in a very big supply chain company for just 1 year. And then I started working for this very small firm, I think 5 people at the time, a Forex exchange called XM. And so I was one of the founding member and kind of got that going. And actually, majority of my career, 8 years, I was in the Forex exchange. So I was running a Forex exchange, managing pretty much Greater China operation. Acquire users, build a product, and making sure to compete with. There are like thousands of competition in Forex. It's a very mature market, yeah. So all it takes is competition, user acquisition, and risk management, all of that. So, and the reason I moved to crypto because 17 was
sorry, just before we get there, when you were doing the Forex thing, what year was it?
So it was from 2006.
Okay.
Until 2000, yeah. So like 8 years, something like that. Yeah.
Okay. Cool.
Yeah. So that was 2006. Yeah. So 2006. I graduated 2005, and I worked 1 year at this New York, and then I started Forex. Yeah.
All right, and then you moved into crypto.
To crypto 17, yeah.
2017. Yeah. Okay, same time as me.
Yeah. Because ICO kind of whole thing. Yeah.
Okay, so you missed the Ethereum one. I'm guessing you were jumping in the other ones.
Man, I had so many shit coins. It was crazy. Yeah, but okay. Being a Forex exchange runner, I was very curious on the exchange and especially the derivative space, right? And there was only BitMEX at the time that's kind of available, and you have OKEX, but both of them had major problems with volatility and uptime, and the whole feeling I got when you join crypto, you think like especially the 17 ICO age, it's like all this crazy white paper, like almost kind of give you the idea like blockchain is going to change the world, like decentralized postcode service, decentralized rental service, everything is decentralized. and you go so excited, and then you go to the trading space. BitMEX felt like a Windows 95 system. Well, and,
it was bad.
And there was no live support. It was very hard to use. For me, I'm like, damn, if this space is gonna take off, we need better exchange. So I started building Bybit, simply want to fix the uptime and make it one of the most reliable exchange that people can trade. Yeah.
So you had the experience with a Forex exchange. I'm guessing you had a good amount of connections and knowledge and just skills to run a crypto exchange. But were there other gaps in your knowledge that you had to plug? And if so, how'd you plug them?
It's very different because Forex is very developed and mature. You don't have to worry about infrastructure. You don't have to worry about product. Everyone uses MetaQuote, and for liquidity providers, you have like hundreds to choose from. It's really just plug and use. So imagine you kind of used to plug and use model. Everything is there for you, and you just, and you move to crypto, everything you have to build yourself. And from the exchange, the matching engine, everything. So from that point on, I actually kind of become a product guy because I realized in crypto is very product driven and it's very innovation driven. And actually you cannot use your old knowledge so much because the traditional like Forex infrastructure is very old and it's not like 24/7. It simply cannot adapt to how crypto is run like 24/7 nonstop. So we had to overhaul all of the systems to make innovations, how to tackle these problems on the matching engine, on the risk calculation, on the margin calculation system to fix these problems. So the initial challenge was very big on the product. And even now today, I think it's very hard for any new exchange to start because you have all this existing exchange, not because they have so much money, because they have spent so much time on the infrastructure. It's going to be so hard to compete on that. Yeah.
Yeah, but you guys did it fairly well, like from right out of the gate. How was that? I mean, was it because you had a good amount of investment? Did you bootstrap it yourself? Like, how did that look at the beginning?
I think we had the right people. Our CTO or our technical co-founder used to be one of the top guys in Tencent, and then he moved to Noah Wealth, which is the largest fund management trading firm in China, and he built a whole trading system for them. So when he came along, he really kind of studied how BitMEX works and read all the documents and understand that. And we actually know how BitMEX works. They put everything into one box, the matching engine, the risk management engine. So for maximum zero error calculation design. But with this design, there's a flaw. Your total output will be very slow. That's the overload happens. So when we designed it, we actually segregated the risk management and margin calculation to like outside model with different plugins you can do, and everything's calculated on the separated cases. So with that, we're able to provide very reliable service and a lot of throughput. However, there's also a problem with our design. That means if you do Quanto on Bybit, like BitMEX had Quanto and portfolio margin, all of that, we weren't able to do that for the first 2 years, simply because we actually chose and picked higher throughput and higher, faster output. So only now we're able to do that because we, again, redesigned the initial system to be able to do that. Yeah.
Tell me about the other limitations that Bybit might be facing.
Right now, we have a multiple system running now. So if you know now, we have unified margin account that's been recently introduced like 3 months ago. Basically, you can use USDT or Bitcoin as collateral to trade USDT, USDC, and our options. We will soon include spot into it. And the last step is to introduce portfolio margin to all of the unified margins. So with that, you have a very similar system that you use any token, you can trade anything, and the floating P&L can be counted into any places you trade.
That's so useful.
This is a complete system overhaul than our previous model. So our previous model couldn't do that. Simply, if you can imagine, USDT can only trade USDT, inverse can only trade inverse, because we had separated matching engine for each product, and now we had to redesign that to put into one box, but also guarantees the throughput and everything. So the team has been working very hard on that. Yeah.
Cool. And staying on a similar subject, one thing I'm really interested in is the free spot trading. This has become almost a bit of an industry standard now. And one of the things it's resulted in is, you can just hammer. I don't even know the numbers of transactions you can put through every second, and there's no downside because you don't pay a fee. That leads to market manipulation. What do you think that's done to the industry? Do you think it's because Bybit does this? A couple of the other really big ones do. What kind of effect do you think this has had on the industry?
To be honest, it was again, because of competition, number one, and number two, it's bear market, and you can see that user acquisition becomes very difficult. And in order to retain users, you want to give them something that for them. And actually, most of the Bitcoin price is not dictated by spot price. It's still the major value is a derivative transaction. So you could do, like, in terms of manipulation and all that, I don't know how much you can impact the price using simple spot, and what would be the goal of that, Yeah.
Okay, so it's mainly like something goes crazy on a derivatives exchange and it gets reflected across other spot exchanges.
Yeah, I still think the major value and open interest and the volume happens within derivatives. Yeah.
Okay. Tell me a little bit about wash trading. I want to hear it from your words. What does it mean to you? What kind of effect do you think it's having on the industry, and also if it ties in with any of these free spot trading and stuff like that?
Okay, you just gotta see if exchanges having incentive to wash or on whether it's spot or derivatives. I think there are exchanges definitely wash. Bybit is not one of them. We have a very solid reason why we can never wash. Because we actually put hard cash into BitDAO treasury based on our volume. So if we have an incentive to wash, we would wash it lower rather than higher. Because we actually have to contribute hard cash into the BitDAO treasury. So far, we've put about close to 800 million. So we don't do that, and there's no incentive for us to do that. But I do see maybe some other exchanges might do that to appear higher rankings on the on CoinGecko's and CoinMarketCap, and I think that would be the only incentive for any exchange that wants to wash and to appear higher on the trading. So you can kind of compare the open interest. And also now with the reserve information being public, you can actually compare the reserve and the open interest versus the volume. If the ratio is very high, then it kind of tells you like where is all this volume coming from, and is the exchange washing it? So you can do that as well. So more transparency will solve the problem, I think.
Yeah. So this again just comes back to the free market regulating itself. People demanding more, and just problems fix themselves because of that.
Yeah, I think so. Yeah.
Good. We talked a little bit about decentralized exchanges. I know that Bybit's got something like this. It's either already out or it's coming out. Can you tell me a little bit about it?
Yeah. So, like I said, I think the future of most of crypto industry is moving definitely towards decentralization. If we make DEX and decentralized application exactly same user experience as a centralized exchange, everyone will go for decentralized. Why not? It's an extra perk, right? So for now, I think as a centralized exchange, our job is to bring people there with all these perks why they use the centralized exchange. Easy of use, good product, customer support. So we are integrating with a DEX called Apex. And actually, the way we're integrating is to put them into our me-user trading interface, both mobile app and also the web page. And clients is able to use their Bybit balance to trade directly on that DEX. And the intermediate bridge will be the Bybit Web3 wallet, which we announced, I think, 3 weeks ago. And clients use one of the biggest complaints for people trading on DEX is transaction fee. When they make the transfers, and it's also difficult to use, especially now all the DEX are on layer 2. So we actually developed a bridge, kind of an autonomous bridge, that the moment you decide to deposit into Apex, your money actually stays on layer 1 into a Bybit wallet, and we dispatch the same amount on layer 2 into your wallet. So it's a simultaneous, and we take all the risk on the exposures. So for you, it's instant transfer and free transfer to trade on DEX. And also, we will make the user, we'll give them the tools like Bybit clients love to use, take profit, stop loss, all these things. Yeah.
Nice. Yeah. So you're aiming to give us the same user experience we get on your centralized exchange, but just decentralized, and we're moving towards that.
Yeah, and also with the DEX, you never have to do KYC. So I think that would be a good thing for everyone.
Yes. Yeah. Again, it's just more financial freedom. Do you have a timeline for when you think people are going to really want to use it? You know, like it might be usable, but when is it going to be an attractive offer that everyone wants to get on?
It will be live on Bybit, I think 2-3 weeks.
Okay.
And we'll see. I mean, because we developed this Web3 wallet, it looks and feels like MetaMask, but it's not. It's the seeds are centralized, stored with MPC on the Bybit custody service. So for any user, it's like an email address, the same as Bybit account to register and get that wallet. But what's on top of it, it's all these cool functions that removes you hassles by using like MetaMask. Ordinary people typically lose their seed, and also when you participate in DeFi and get yield, I mean, the steps you have to do with the clicks and the hardware, all that things, we're going to remove that and make them easy to use. Yeah.
It's so confusing right now, man, and it's been a bit like, even for me, like I've been in this space for a long time, and mate, like every time I have to do something with MetaMask, I'm rolling my eyes. Like I wish I didn't have to use it because it's so confusing.
Yeah. So like give you example, like if you want to stake your thing in Curve, right? To get a Ethereum yield, staking, you need to first put the liquidity in, a bunch of clicks, and then you need to get the liquidity token to stake it, a bunch of clicks, and all that is so complicated even for crypto natives, right? So for us, we're gonna present literally like a button. You just click, you see the yield, you click, and everything is done behind the scene with our AI and automation with our wallet. And one of the things people don't realize is that there are so many scams and rug pulls happening in DeFi as well, right? And you cannot expect a regular user to be up all day long looking at Twitter and then kind of taking care of their investment. So we're going to set up some auto take profit, auto stop loss on your DeFi mining and all these DeFi explorations. And also you can set, for example, when the LTV of certain mining pool has been dramatically drained, there's auto pool and the wallet will do it for you. So all of those things, I think, will help people to kind of navigate Web3 in an easier way. Yeah.
Perfect. And with all of these really cool features, and linking this back to FTX a little bit, one of the concerns I have, and I know some of the other people that are already thinking ahead as pessimists will be thinking about, is these kind of solutions can have backdoors. And that's really scary.
Yeah. I think, again, I want to mention that Bybit's job is to bring the mass to crypto, and our product is is designed for mass adoption, right? You can obviously, if you are crypto native, I encourage you to use MetaMask, your own ledger, so your seed, your key, your token, right? But you have to understand that a lot of clients don't understand all that, and we actually serving need for them. Now, the moment they've been educated and they've tasted the good things about Web3, and they got involved, and they can look at Bybit, learn to understand all that, and they want to move on to their own wallet, we will help them. Nice. And actually, we have a completely decentralized wallet in production that will match MetaMask and try to make it easier, but it's completely, you keep your own seed and all that. But we want to be in the middle, and we service those guys who have no clue, like your uncle, your auntie. I don't think for those guys, the reason to enter Web3 is because they want their seed. It is the other reason. It is the incentive. It is the profitability. It's the opportunity. We need to let them taste it, and then so gradually they can move there. So that's kind of our take. Yeah.
Yeah, I think that's important, man. I'm always saying this, but I'm a bit of a fanatic for it, right? Like I'm a Bitcoin maxi, and it's like like with normal people, it just doesn't come through. But I'm always like, yeah, not your keys, not your coins, and all that. And
yeah.
But people, yeah, I mean, like, how are you going to care about this unless you've got like a huge stack of money? And even then, I mean, we've seen like the FTX drama exposed this massively, as even people that I consider to be very smart with risk management just are totally comfortable leaving ridiculous amounts of their, net worth on an exchange, and that might not change. So it's important to have these kind of solutions. And I love that you guys are trying to go in the direction of, all right, look, we'll give it to you, but try and learn it. And then when you learn it, we're ready to give you the more you are your bank solution, where you take control. I love that. And actually, so and another thing you mentioned is custody of funds, third party custody. This completely, this is insurance, right? Then we trust the, what's the word? Almost like the escrow here. If I'm depositing my funds on Bybit, but a third party is what is in control of it, not Bybit, and assuming I can trust that third party more, do you think that's one of the directions this industry might be headed into? Because I've seen that. Yeah. Okay. Go on.
Yeah, I think it definitely is. That's already in the building. We are working with Fireblocks, Copper, Clearloop, pretty much all the well-known custody service. They already provide something like that. So what these guys do is they offer escrow account. All you need is to transfer there, and then the clients hold one key, Bybit holds one key, or the exchange holds one key, and the escrow holds one key. So when consolidation happens, you can verify it. It takes 2 keys to withdraw your fund. So that's already in the works. But again, this solution is not really designed for retails because Copper and Fireblocks, they have very high requirements for any users. Typically, only institutions get to use them, and there's a high fee of using their service, right? So at the end of the day, the reason I didn't mention this is again, Bybit average user deposit is like $500. So I mean, for majority of our users, it's not a viable solution. Yeah.
Okay. Yeah, that's fair enough. It's good to know that it's coming. I think that as again people become more educated on this, they might start to demand it more. And there's companies that offer this custody
so
will just become.
I hope there are other custody escrow solutions come out in the cheaper ways, so the mass can use, and we would love to incorporate it with them as well. Yeah.
Nice one. And again, just staying on this topic, I have to ask you a little bit about the insurance fund that Bybit has. I don't actually know a whole lot about it. Can you tell me about it and how it works? And also, how much does it cover? Because there's a lot of people on Bybit. There's a lot of volume on Bybit. How much of it does it cover?
So the insurance fund actually does not cover hacking events and things like that. So the point of insurance was designed for perpetual swap because initial. So how is with the evolvement of perpetual contract, the very first version of perpetual contract, I think was designed by some Russian platform. I forgot the name, and then it got kind of masked by the Chinese exchange OKEX and Huobi. And what they use is whenever people trade on leverage, when the market moves in a dramatic way, they get liquidated, but they actually lost more than they have. And if you are a peer-to-peer system, you have $100, you could lose probably $120. So where's that $20 coming from, right? That $20 in traditional fund is typically covered by the broker, or there is certain third party that covers that. But in crypto, there isn't. So the initial development of perpetual is called social loss, meaning that whoever made a profit will pay for the extra loss during that big dip or a big spike. But a lot of people complain. There's like, well, why is it not fair? Why do I have to pay just because I bet right? So then we evolved into the insurance fund model, meaning that when people get liquidated, if you have $100, you get liquidated at when you only have $5 left. And on average, if you do that on average, there's always a little bit, $1, $1.20, like pennies left when you get liquidated. So those amount goes into the insurance pool, right?
Okay.
When people lost more than they have, this insurance pool is used to pay out. So so the pool is designed to pay out for overdrafting or over liquidation. Yeah.
Sure. Yeah, that's a good way to describe that. So that's okay. So that's mainly for that kind of issue. I'm guessing then from what you've said that the insurance fund isn't designed to cover other things.
No, because the insurance fund can go up on the regular days. Like when the market movement is not. If you look at even Bybit insurance fund or any BMax or whatever, on the peaceful days, it goes up. Because, like I said, people are liquidating on the dollar, but when there's a big spike or a big dip, insurance pools get drained because there are a lot of people overdrafting, and then it gets that mechanism gets paid out. Yeah.
Got you. Okay. Yeah. Cool. So I've got two more. I don't think we have a lot more time. I just want to know about FTX. Is there anything that you want to tell people that the general public might not know that you think is important? We already know a lot about what happened, but is there anything you're burning to get out about this FTX issue, whether it's related to FTX specifically or something to do with the Bahamian government? I'm opening this up quite a bit, or regulation, or just the collateral, the contagion damage. Anything you really want to get out?
Look, I think most people can get more information on Twitter. I'm actually getting a lot more information from Twitter as well. The initial response from us was very shocking as well. But as exchange, we have our numbers, and we look at FTX. We always scratching our head, especially in the bull run. Yeah, like how do they have all this money, make investment, and literally every token you see Alameda on there, right? And also you see them billing out all these companies. Like, where do they get the money? And so our assumption was always that Alameda must be super profitable, and they must be so good at trading and also investing, so they have all this extra cash. But now it turns out they were just using clients' fund, and to the shocking understanding that they actually don't have any internal infrastructure to control risks. Also, there's no segregation of finance. There's probably no finance or no HR department, and latest the funding is that clients all deposit into Alameda, so Alameda never bothered to credit the fund. So they just take whatever you deposit, imagine, and if they have a project, they just use it, and if they have to make a trade, they just use it. So there was never a FTX. FTX was more like a display, like a game, and they're just pressing crediting. I mean, and this is how they are actually able to give users such an easy use product in terms of collateral. A lot of people use FTX because you can simply deposit something and then use a collateral to trade everything. For us, it's so hard to do because the risk management and each level, the risk control is so hard. And this is why Bybit was never able to catch up to them. And we spent so much time trying to figure it out and how to catch up. And now it can all make sense. There's no risk management. It's just credit. Let's do it. And you have Alameda taking all the risk on the gamble of the clients. So it's, I mean, I guess that's one way to do it.
Yeah. Well, I've always believed in. I've achieved some really cool stuff in my life, and I did it kind of from like age 13 up to now, and I've always just kind of been on a slow, steady grind up. Never really had like crazy huge spikes like some of the other people in this space, but also fortunately never dropped down because of that. So to see that Bybit's on a path like that is amazing. That's exactly what you want. I mean, if it means that you have to be slightly less competitive, but you can survive, then that's a big deal.
Yeah, man. One of the key thing is exchanges. All you need to do is survive. This is something we learned. I mean, I don't think we did anything crazy to BitMax. It was BitMax. I think it was their own collapsing, and now you see FTX. And you see all the exchanges that go out of the picture is because they fucked up internally, whether they got hacked or like FTX, they use users' money. I mean, from a simple competing perspective, no exchange died because they cannot compete almost. Like once you kind of make the initial cash flow, you just stay there and you kind of, you always have your chance. And now you see like a lot of these kind of dying exchange coming back because they simply stick around, right?
Yeah, I've noticed that quite a bit now. Do you know, I'm curious, you must have had so many opportunities to do things out of greed, like easy lines of credit and so on. How did you resist these things, and how did you, if you did?
I'm actually very risk averse.
Okay.
You can see from our a few things, right? Number one is we all know China is a huge market. We actually blocked China from day one because I have developers in China. I'm not clear about Chinese policies, and I just don't want to mess with it. The US is the same. We blocked them from day one, and also Singapore, because I live in Singapore now, and so we blocked it. So actually, these three countries are very major potential opportunity countries. And if you look at from market share perspective, if we did attack China, Singapore, and even the US, we could be a lot bigger, but we didn't do it simply because I don't want to take the risk. So that kind of applies to a lot of the internal risk management and things like that. It's just my understanding of exchange is as I'm pretty happy with the current business model. pretty cash healthy, and we never had to raise, right? So why kind of risk it and why hurry and just kind of focus on being the fundamental, right?
Yeah. Okay. I love that. And then just to round this off on a similar note, this is actually I was doing a live stream last night, and I asked my viewers, what do they want me to ask you? And one of the big ones that I didn't even think about is, what is your why? Purpose. A little bit of a cringy question. And this is the thing. I don't want your scripted PR response if you have one ready. Like, what is the real reason that you're in this? For me, mate, I'm totally honest. I've said this a million times. I joined crypto because I wanted to get fucking rich. It worked, and now I'm just kind of addicted to derivatives trading. Thank you. So that's why I'm here. What about you? And then also a little bit about the kind of future for you and Bybit as well.
I think initially was also to get rich. Yeah. Initially, cool. I think I didn't want to work for someone else, which I did for so many years, like 10 years, right? And I feel like I need I always wanted to do something on my own. And I feel like I need an industry that can help us to really have the maximum effort compared to the result, right? The maximum result compared to effort. So I picked in this industry because I think blockchain is going to change the world. So by now, to be honest, money is not so much the reason why I work, like literally for the past 2 weeks nonstop, right? And Bybit, a lot of people have seen a lot of the Bybit people works pretty hard, like 9 to 9 at night and 6 days a week sometimes. A lot of it now it's because you want to make a difference and really push out a good product. Like I just cannot stand seeing the product and also the reputation of Bybit getting hurt. And that's kind of the reason I get up. Is I want to check on Twitter. I also, and the team's always like almost like you work for the company and the team also works for the company, right? And you have all these teams demanding things and asking you questions. As a CEO, you have to be there to solve the problem for them. And I have to be on the very front line. Otherwise, people need to have things to look up to. And I think that's my purpose, is to kind of, I enjoy being a leader and kind of lead the company and also be responsible for the product and the service we push out. Yeah.
Beautiful. Beautiful. And to round this off, is there anything else that you want the viewers to know about, I don't know, any last words you want to that you want to share? Anything that you're burning to get out that we haven't covered today?
I think people might lose hope for the industry, but I tell them not to because blockchain for me is crypto for me is innovation driven, but the fundamental is consensus. I believe consensus is here. Everyone knows that if you compare to the traditional finance system, it's even more fucked up. And I think we're gonna move out of this a lot better and a lot cleaner, and that's how we learn, right? I mean, every bear market has its kind of dramatic moments, and I think we're experiencing it, and we will soon see the bottom very soon. Yeah, get ready to
Beautiful.
buy.
Oh mate, I'm so excited at these price levels, so I'm definitely going to be there. If we get a sub 10k Bitcoin, that's trading is going to be very fun. If we drop below 10k, that's what I know for sure. Mate, thank you so much. We've overran. I appreciate your time, and let's do this again.
All right, sounds good. Thank you, man.
Cheers.
Thank you. Always good to be here. Yeah.
Amazing. So I'm going to be honest with you guys. That was my first time ever doing something like this, and I was nervous. I was really nervous because, I look up to the guy, and journalistic integrity is very important. I never considered myself someone like that, and I don't consider myself someone like that now, but I hold very high standards for journalists, and today was me having a chance to bring some really important truths to the surface. I want to know how you think I did. I want to know how you think Ben did. And I'm going to be doing more of this if you guys liked it. You can see the kind of approach we take on this YouTube channel with the, when talking to big figures. I'm not interested in the easy stuff. I'm not interested in the conversations that you can just Google and, you can look on CNBC and get. We're doing things differently on this YouTube channel. So let me know what you want to see next. Who do you want to see next? What kind of things do you want me to do differently and better? And let's just have a conversation in the comments, legends. I really want to know what's been on your minds. If you did enjoy this one, once again, you know exactly what to do. Show this video some beautiful engagement, like, subscribe, hit the bell icon, check out Bybit with the link down below. Again, with a $30,000 bonus, that is absolutely huge. That is money that you can trade with, well worth taking a look at. And with that, guys, I'm going to be signing off. I've got another video coming out very soon all about the analysis, so make sure you are staying tuned for that, and thank you. I'm out. You made it to the end. Thank you. There's an offer I want to give you, something really, really cool. I made a product that covers the key lessons I learned from a psychological perspective and a couple of the really, really important things as a trader throughout my journey. I've been a trader for more than 5 years, and most of that in derivatives. I learned a lot of key things from myself, my students, and so on about, just maximizing success as a trader. I put it all into an audiobook, ebook, and video course version, which the video course is actually going to be re-recorded very soon. I want to give that to you for free, and you can get access to it by following the link in the description down below and the steps that I'm about to flash on screen. This product has changed so many traders, and it's been it's been directly responsible for saving and making me hundreds of thousands of dollars. It's absolutely critical information. It's stuff that I honestly don't think you can reasonably be a serious trader without knowing. You may already know some of these things. You probably won't, depending on your experience level. If it's something that you want to get, usually people have to pay for it. You can get it for free by following the steps that you're about to see on the screen right here. So go ahead and check it out, and I'm going to leave you alone now. Have a great rest of your day. So if you're looking to take advantage of our Trade Insane package, get this completely free info product, here is how to do that, along with getting your bonuses currently up to $30,000 up for grabs here. You're going to get onto this link, which you've probably already found, and just put in your name. So I'm just going to put in a standard test name here with a test email address, and we're going to select if you're already in the 4Flies Gold or VIP Telegram channels. If you're not sure, you can click not sure, and then your Telegram handle if you have, and then click next. Are you already registered on Bybit? This is very important. You would have had to use our link to sign up. You'd find it in any of the descriptions of my YouTube videos. We're going to go ahead and select yes. If you select no, it's going to give you a link to sign up. So we're just going to go for yes right here. And then we're going to get our user ID. So here's how to get your user ID on Bybit. If you're logged in on your desktop, you're going to have a page that looks a little bit like this. In fact, it's going to look a little bit more like this. You're just going to go hover up onto this right here, and that's going to bring up your email address and your user ID. So you're just going to copy that user ID, bring it right back to the form, paste it in here, and you're done. That's it. Click submit, and you are going to get your free access into our info product within less than 7 days, hopefully even a lot less than that. So there you go. Thank you very much.